Welcome to the Financial Overview webinar. My name is Emma Benjamin, and I am a member of the USDA RUS ReConnect support team. For the next 40 minutes, I will provide an overview of the financial requirements for the ReConnect program. The first half of this webinar will provide applicants with a broad stroke overview of the financial components and considerations of the ReConnect program, including a summary of the components within the financial section, key changes from the fiscal year 2019 funding opportunity or FOA, the FOA requirements as they pertain to financials, key considerations for the financial section within the ReConnect application, including an overview of the eligible and ineligible project costs, and a list of post-award requirements. In the second half of this webinar, I will walk through screenshots of each subsection within the financial section so that applicants can successfully complete a pro forma projection in the RUS application system, which opens on January 31st. We will also have a few minutes at the end of this presentation for Q&A. And finally, please keep in mind that all information provided during today's webinar is informed by the fiscal year 2020 FOA, which was published on December 12, 2019. To start, USDA will use the information inputted in this section to determine if the project is financially feasible. An eligible project must demonstrate a positive ending cash balance as reflected on the cash flow statement for each year and in year 5 of the forecast period. In this section, applicants will need to provide information related to historical and forecast performance, and submit pro forma projections within the application portal, which will include an income statement, balance sheet, and statement of cash flows. There are a few things applicants should keep in mind when completing this section. The financial structure of the project, 100% grant-loan combination, or 100% loan, will impact the payment structure and the required documents the applicant will need to submit. Applicants must only include eligible project costs in the project plan. And finally, applicants should keep in mind that the project, service area, and network tabs of the application should be completed before beginning the Financials tab, as the Financial section is heavily reliant on the information entered on those tabs. There are several changes between the fiscal year 2019 FOA and the fiscal year 2020 FOA that I want to highlight. Some of the changes are programmatic and some re-clarify requirements from last year. The changes include the requirements for 2 years of unqualified, comparative, audited financial statements has changed to unqualified, comparative, audited financial statements for the previous year from the date the application has been submitted. If you do not have your audit completed for 2019 prior to the application window deadline, it is acceptable to submit the previous 2 years' audits. If you do not have the previous 2 years' audits, it is acceptable to submit your 2018 audit as long as you also include a letter of engagement for the 2019 audit. Additionally, clarification added to the fiscal year 2020 FOA states that under certain conditions, a subsidiary can use the unqualified, comparative, audited financial statements of its parent company to meet certain eligibility requirements. The applicant can use the consolidated financials of the parent as long as the parent fully guarantees the loan, or in the case of a grant, guarantees that construction will be completed. In regard to the 50% loan component, applicants may propose substituting cash for the loan component at the time of the application, and funds must be deposited into the construction fund account at the closing of the award. And for all applications, all matching funds must be deposited into the construction fund account at the closing of the award. If the matching funds are provided by a third party, a serious commitment from the third party must be submitted, indicating that the funds will be available at the closing of the award if approved. Pre-application expenses that were incurred in Round 1 but benefit an application for Round 2 may be funded up to 5% of the total award in Round 2. The fiscal year 2020 FOA also adds a new ineligible cost. That is, ReConnect funds may not be used to fund facilities not required to provide broadband service. I just reviewed some of the changes between FOA 1 and FOA 2, but I want to quickly review all of the FOA requirements that applicants must adhere to in this funding round. I will quickly go over this since some of these were just mentioned in the previous 2 slides. First, as I already mentioned, applicants must submit an unqualified, comparative, and audited financial statement for the previous year from the date the application is submitted. Additionally, all project costs must be fully funded or accounted for in the application. To demonstrate this, applicants must include evidence of all funding other than the RUS award necessary to support the project, such as bank account statements, firm letters of commitment from equity participants, or outside loans, which must provide evidence of the timely availability of funds. If outside loans are used, they may only be secured by assets other than those used for the collateral under this FOA. If the application states that other funds are required for the project in addition to the ReConnect funding requested, evidence must be included in the application identifying the source of funds and when the funds will be available. Projects must also be financially feasible and sustainable, and must demonstrate to the satisfaction of RUS that it will be able to, 1, generate sufficient revenues to cover expenses, 2, will have sufficient cash flow to service all debts and obligations as they come due, 3, will have a positive ending cash balance as reflected on the cash flow statement for each year of the forecast period, and 4, by the end of the forecast period will meet at least 2 of the following requirements: a minimum times interest earned ratio or TIER requirement of 1.2, a minimum debt service coverage ratio DSCR requirement of 1.2, or a minimum current ratio of 1.2. Now I will talk through a few key considerations applicants should keep in mind when completing the financial section of the ReConnect application. Specifically, I will walk through the eligible and ineligible project costs and the structure of the RUS loan products. Starting with the eligible costs, as you can see listed on this slide here, it's important that the application only includes eligible costs as outlined in the fiscal year 2020 FOA. Eligible costs must be consistent with the cost principles identified in 2 CFR 200 Subpart E cost principles. And all costs must be reasonable, allocable, and necessary. Award funds may be used to pay for the following costs: the construction or improvement of facilities, including buildings and land required to provide broadband service, to fund reasonable pre-application expenses, which are not to exceed 5% of the total award. And as previously stated, these costs must be incurred after the publication date of the FOA, December 12, 2019, and be documented. An exception to this requirement is in the case that the applicant applied for funding in Round 1. Those pre-application expenses may be eligible for reimbursement under the second round of funding if these expenses support the Round 2 application. For example, engineering design, market survey, subscriber projections, etc. However, RUS reserves the right to accept or reject expenses associated with Round 1. Additionally, in the current FOA, for 100% loans only, the acquisition of an existing system that does not currently provide sufficient access to broadband is eligible and is limited to 40% of the total loan amount. Any application that proposes to use any portion of the award or matching funds for any ineligible costs may be rejected. Ineligible project costs include operating expenses of the awardee, costs incurred prior to the date on which the application was submitted, except for eligible pre-application expenses incurred prior to the publication date of the FOA, costs associated with an acquisition of an affiliate or the purchase or acquisition of any facilities or equipment of an affiliate, cost of an acquisition of a system previously funded by RUS, the purchase or lease of any vehicles other than those used primarily in construction or system improvements, costs associated with operating leases of broadband facilities, including indefeasible rights of use agreements or IRUs, to fund the merger or consolidation of entities, costs associated with the purchase of spectrum not part of an eligible acquisition, to fund mobile services facilities, acquisition of a system that provides sufficient access to broadband, 10 1 megabits per second or greater, to refinance any outstanding debt, and to fund facilities not required to provide broadband service. Additionally, this slide provides a few considerations about the financing products offered under the ReConnect program. In terms of the structure of the loan products, the loan amortization profile is level debt and repaid on a monthly basis. The amortization period is set to the composite economic life of project assets to be financed, rounded to the nearest whole year, 3 years. There is a 3-year principal and interest deferral that starts at the time funds are made available. The interest rate on the RUS loans vary depending on the product. The 100% loan is fixed at 2% interest. The 50-50 combination is set at the U.S. Treasury rate for the remaining amortization period at the time of each advance. The interest will be capitalized at the end of the deferral period, so this should be reflected appropriately in the pro forma projections. And finally, loan proceeds or other funds pledged to finance the project as applicable must be expended before grant proceeds if an applicant receives both. Pursuant to the FOA, USDA will require applicants to adopt and adhere to the following financial reporting requirements and guidelines. Awardees must adopt a system of accounts for maintaining financial records acceptable to the agency, as described in 7 CFR Part 1770, Subpart B. Awardees must submit quarterly and annual comparable audited financial statements prepared by a CPA, along with a report on compliance and on internal control over financial reporting, as well as a management letter in accordance with the requirements of 7 CFR Part 1773. The CPA conducting the annual audit is selected by the borrower and must be satisfactory to RUS as set forth in 7 CFR 1773, Subpart B, RUS audit requirements. In addition, USDA may conduct a management analysis profile or MAP and site visits to ensure that the awardee is set up to comply with award terms and conditions. In the second half of this presentation, I will walk through screenshots of some of the subsections within the financials section. As previously mentioned, applicants will be required to include pro forma projections in the RUS application system that includes an income statement, balance sheet, and statement of cash flows. To successfully prepare these financial statements, applicants must first complete and populate underlying schedules or subsections as applicable given the characteristics of the project and entity. The first 9 subsections listed on the screen serve as inputs to both the historical and forecasted information and will populate some of the fields in the pro forma financial statements, which will be included in the final 4 subsections listed on the screen. Information requested by the application system includes local network services revenue, competitor service offerings, depreciation schedule, long-term debt schedule, capital contributions, amortization schedule, non-operating net income, plant in service schedule, network service area revenue, and once those sections are completed, applicants will complete the financial statements, which includes an income statement, balance sheet, and statement of cash flow. Finally, we'll discuss additional financial documents that may be submitted in this section. Before we get started walking through some screenshots of the application system, I want to stress the importance of following the sequencing of the sections within the application. Whenever the input to the financial statements is adjusted, all downstream pages that rely on the data input must be saved. Otherwise, the user may encounter errors when running a validation on the Summary Submit page. For example, if the loan amount is adjusted in the CIW summary, the user must recalculate payments for the new RUS debt in the amortization schedule section. Or, if an edit is made to the local network service revenues generated by service offerings or subscriber projections, the local network service revenue summary must be resaved in order for the data to flow into the income statement. This will make more sense as we walk through the application. The purpose of this slide is to orient everyone to the list of subsections that are included in the Financial tab. I will run through this presentation from top to bottom, starting with local network service revenue. The local network service revenue section is where applicants provide information related to projected revenues from local network services derived from the proposed project. The applicants must include the following in this section: the service offerings that will be offered in PFSAs and NFSAs. It is important to include projected revenues from NFSAs so that the agency can have a clear picture of all of the operations of the applicant. In completing this section, applicants should only select the applicable service areas for each service offering identified. Next, applicants must identify subscriber projections for all PFSAs and NFSAs. Enter the price, new subscriber number, and the number of cancellations for all the applicable years for all PFSAs and NFSAs to calculate the operating revenue. Applicants only need to include services that they are offering in a PFSA. Next, applicants will need to identify other projected or historical revenues earned that are not a direct result from providing service. For example, installation fees, monthly cable rentals, or broadcast network fees. Then, applicants must identify the subscriber breakdown by service area, including residential and business subscribers, and total households in the service area. When completed, users can view a summary of the local services revenue based on how this section was populated. If applicable, there is a section for applications to upload supporting documents related to alternative household data as it applies to the subscriber breakdown. The competitor service offerings section asks applicants to enter information regarding competitor service offerings for each PFSA and NFSA recorded in the service mapping tool. Applicants will be prompted to include the following regarding each competitor service offering: name of service provider, service offerings, service package description, broadband download speed, broadband upload speed, customer type, price, and service areas. Please note, upload and download speeds will be required for data service offerings. If unknown, please select NA. Please repeat this section as necessary to input all competitor service offerings. Applicants must indicate depreciation rate assumptions for all asset types identified in the Capital Investment Workbook, referred to as the CIW, and any other depreciation expenses expected to be incurred during the forecast period on an annual basis. The depreciation schedule pulls inputs from the CIW and the Capital Investment Schedule, referred to as CIS. Therefore, this section should be completed after the network section has been finalized. The four main components of the depreciation schedule include the following. Depreciation rates for all project asset types should align to the deployment and retirement of the plant and must be consistent with guidance offered in the ReConnect program construction procedures. If an applicant is regulated by a public utility commission, they should adopt those depreciation rate assumptions. After depreciation rates are provided, the application system will calculate the composite economic life, or the weighted average economic life of all classes of facilities in the award. RUS uses the composite economic life to determine the service obligation of awards and the maximum tenor of the loans. The third component to the depreciation schedule is the annual depreciation expense, which is the annual depreciation expense for assets included in the PFSA, NFSA, and UPLF CIWs across the 5-year build-out period. This is calculated based on the CIS and the depreciation rate assumptions provided by the applicant. Finally, the depreciation expense summary is the fourth component. The depreciation expense summary provides a breakdown of annual depreciation expenses for the existing plant, property, and equipment, or PPE, and non-telecommunications plant planned to be added during the forecast period. The total depreciation expense calculated by the application system from the bridge year to the end of the forecast period will be automatically populated in the income statement. In addition, applicants will provide estimates for annual depreciation expense for grant-funded plant if applicable. Please note, this is a new feature in the application. Applicants must provide information related to long-term debt and equivalents that are currently outstanding or planned during the forecast period. This information is used to calculate the amortization schedules, so this section should be completed before moving on to the balance sheet. In addition, if edits are made to the long-term debt instruments created in the long-term debt schedule, the funded debt summary tables must be updated and resaved in order for the adjustment to be realized in the applicable current maturity line items for each applicable source of debt on the balance sheet. The ReConnect application includes 5 categories of long-term debt: funded debt, RUS, RTB, FFB. This section is intended to capture all existing RUS needs, including all telecom and electric loans. Funded debt other. This is intended to capture all non-RUS, RTB, and FFB debt made up of fixed maturity types of borrowings that are funded by interest payments. Funded debt rural development. This section should capture any debt from USDA RD that is not from RUS. Other long-term debt. This section is used for all long-term debt that is not includable in the other long-term debt items, for example, regularly scheduled principal and interest payments. And the last category includes all obligations under capital lease. It is important to note that applicants must upload documents for each long-term debt instrument and capital lease that is identified. Applicants must provide documentation to support any sources of capital used for the project. This includes identifying the source, timing, and volume of investment during the bridge year and 5-year forecast. Some examples include if the applicant is proposing to provide any owner or member capital, evidence of equity infusion must be uploaded. If the applicant is proposing to provide investor capital, a letter of commitment or term sheet must be uploaded. If the applicant is proposing to contribute through a state grant, grant documents must be uploaded. And if the applicant is applying for a 100% grant, users must identify the match source on the schedule and upload evidence documentation. The application system calculates an amortization schedule based on the applicant's loan information, which means the CIW, CIS, and the annual capital investment schedule must be completed before amortizing the new RUS debt, the ReConnect loan. In addition, the depreciation rate assumptions and composite economic life of project assets must be entered before applicants calculate the new RUS debt principal and interest schedule. There are 3 components of the amortization schedule. New RUS debt includes loan information, which enables the system to calculate an amortization schedule. A pre-populated table will show the total loan amount, loan term, deferral period, start date, and interest rate. For 100% loans, the interest rate will be fixed at 2%. For the loan component of the 50-50 loan grant combination, the user should input the U.S. Treasury rate with a comparable maturity to that of the composite economic life calculated by the system. The interest rate will be a fixed rate set separately for each advance. The interest rate will be set equal to the Treasury rate of the nearest maturity greater or equal to the maturity of the advance. And as mentioned earlier, if the loan amount is adjusted in the CIW summary, the user must recalculate payments for the new RUS debt in the amortization schedule section. RUS debt summary. This section is used for any debt from USDA RD that is not from RUS. Applicants must provide the forecast payment information, including interest paid, principal paid, and long-term portion. And finally, debt summary. Based on the amount of debt items added in the specific long-term debt schedule section of the application, a certain number of tables display for each debt item added, as well as a summary table if there are more than one debt item. Applicants must provide the appropriate information for new borrowing, interest paid, and principal paid. Please also note that for the second round of funding, the application no longer amortizes UPLF debt as it did during the first round. New borrowings, interest, and principal on an annual basis for UPLF debt that occurs in the bridge year and 5-year forecast period must be provided by applicants in the appropriate funded debt summary table. Non-operating net income includes gains and losses on sales of equipment and capital gains. Applicants must input data for any non-operating net income before moving on to the income statement. Importantly, assumptions will need to be completed and reviewed by USDA as part of the application. This slide lists the information the applicant will need to include, such as the description of the item and the amount for the historical, bridge, and forecast years. Applicants should enter information related to existing plants and non-telecommunications plants in this section, as well as grant-funded expenses and grant-funded assets, which will be reflected in the balance sheet. In the Plant in Service Beginning of Year section, enter the appropriate dollar amount into the bridge year field. Applicants are only able to enter the dollar amount for the bridge year. Plant additions for PFSA, NFSA, and UPLF will be auto-calculated from the CIS. In non-telecommunications plant additions, enter the appropriate dollar amounts into the bridge year and forecast years. In less plant retirements, enter the appropriate dollar amounts into the bridge year and forecast years. In less grant-funded expenses, enter the appropriate dollar amounts into the bridge year and forecast years. And finally, in less grant-funded assets, enter the appropriate dollar amount into the bridge year and forecast years as well. Applicants must also report revenue from network access services and include statement subtype, historical years, bridge year, forecast years, and assumptions. Once you have completed the supporting financial schedules, you may complete the pro forma financial statements. I'll begin with the income statement. The application system requires applicants to submit an income statement for each period in the pro forma time horizon. The income statements demonstrate financial performance and the net position of the applicant via recorded revenues, expenses, gains, and losses over the historical and forecast periods. The income statement will be reviewed by USDA in order to evaluate an applicant's historical financial performance and anticipated financial performance over the build-out period of their project. Specifically, the income statement will help convey to USDA anticipated top-line revenue growth given various assumptions, including increases and decreases in future expenditures, depreciation, amortization, and taxes, rates and trends in expenses, profitability as measured by net income, and data necessary to perform evaluation of the applicant entity. The income statement now includes a few new line items under this second round FOA. Another operating revenue line item, amortized grant revenue, has been added pursuant to the RUS grant accounting policies, and another fixed charge line item, interest on lines of credit, has also been added to account for this interest expense independently from other fixed charges. Aggregate line items, such as net income, will be automatically calculated by the application system. Additionally, the agency will use the income statement in conjunction with other components of the pro forma to evaluate the FOA required compliance with DSCR and tier ratios. This is a screenshot of a section of the income statement with the application that applicants will need to complete. Applicants will need to prepare assumptions for each line item. USDA will consider the reasonableness of assumptions as part of the application review. Therefore, assumptions should be as detailed as possible. This is one area where we do see problems with assumptions not aligning with projections. If the assumptions do not fully support the projected revenues and expenses, the application may be rejected. Next, I'll discuss the balance sheet. Applicants' balance sheets demonstrate the assets, liabilities, and capital structure of the entity in a given time period. The balance sheet will be reviewed by USDA in order to evaluate historical trends in the corporate and capital structures and provide snapshots on how they are expected to change over the course of the build-out period. Additionally, the agency will use the balance sheet in conjunction with other components of the pro forma to evaluate the FOA required compliance within the current ratio. Applicants must prepare and identify the assumptions underlying the balance sheet projections in current assets, non-current assets, PPE, current liabilities, long-term debt, other liabilities, and equity. The balance sheet also now includes a new line item under this FOA. Applicants will now record deferred grant revenue under other liabilities and deferred credits in accordance with RUS grant accounting policies. This is a screenshot of a section of the balance sheet within the application that applicants will need to complete. Long-term debt and current liabilities will be auto-populated on the balance sheet based off of the data provided in the long-term debt schedule and capital contributions workbook. Finally, the application requires applicants to submit a statement of cash flow. The applicant's statement of cash flow demonstrates whether or not the applicant is generating or using cash on an annual basis. Because the income statement is developed on an accrual basis, timing differences between when income is earned or costs are incurred and the money is received or paid can result in differences between cash and net income. In addition, non-cash items like depreciation, which eventually require maintenance expenses, also create differences. For cash flow from investing activities, applicants will need to manually enter CapEx and plant constructed using grant proceeds line items. For cash flows from financing activities, applicants will need to manually enter proceeds from grants. Applicants must identify the assumptions underlying their cash flows. Only projects that RUS determines to be financially feasible and sustainable will be eligible for an award under this program. A project is financially feasible when the applicant demonstrates to the satisfaction of RUS that it will be able to satisfy the following conditions: sufficient revenue to cover expenses over the life of the award, sufficient cash flow to cover all debt service obligations as they come due, including subordinated non-project debt, and positive ending cash balance for each year in the forecast period. The ending cash balance may be less than the starting balance at the beginning of the forecast period, so long as cash flow is positive. In addition to financial statements, the application requires various workbooks and schedules to be filled out that provide more detail on the network, market, and economic assumptions that went into building the pro forma. In addition, supporting financial documents may be required depending on each applicant. This is a list of some of them: evidence of equity infusion, federal state grant documents, letters of commitments and term sheets, lines of credit, competitive analysis, and bank account statements, to name just a few. If applicants have lines of credit, applicants are required to explain the credit in the application. Applicants should upload any and all support documents to substantiate their revenue projections. USDA will evaluate different revenue streams independently from one another. Please make sure to use descriptive naming conventions for all documents. This will help you identify what has or has not been uploaded. The Application Document Manager will let you see all of the documents you've uploaded to the application, and it's easier to sort through them when they're named well. Finally, I will discuss some available resources for you to learn more about the ReConnect program and get started on your application when the window opens on January 31st. USDA Rural Development is providing resources and technical assistance to applicants as they prepare to apply for the ReConnect program. RD also plans to continue facilitating webinars addressing frequently asked questions and specific aspects of the application. Past webinar materials are available on the ReConnect website. The ReConnect website is also a great resource for additional information. It contains program details, fact sheets, and technical assistance materials that can be used when developing applications. Please note, resources and information on the website will be continuously updated and added to as we approach the application window. Please be sure to keep checking back often. Finally, I would like to mention that USDA is also maintaining a help desk to respond to questions submitted via the ReConnect website. This concludes the financial overview webinar, and we will now take a few minutes to answer live questions from the audience. If we do not get to your question during today's presentation, please submit it on the Contact Us form on the ReConnect website, and we will follow up accordingly. Great.
Rebecca, this is Chris Kohlberg.
Hi, Chris.
There's two questions out there that need to be answered, and I just wanted to provide a little bit of detail, and then we're going to get them an official answer later on. The financial viability is the question from James Renard at Pioneer Connect. He asked if the financial viability is based on the company's overall results or only the incremental revenues and costs. And my answer to him is both. In the end, at the beginning of the organization and through the project, we're looking for viability of the company, and then the project itself has to also be viable. So, but those viabilities are projections out into the future, and they have to meet those criteria as they go along. So I would say they're both. I need to give him maybe a little bit more further detail. I don't believe at the time that there's any waiting, but they're looking for that criteria to be met at both the company level and project level. I will then go on to the second question. This is from Kirsten Holland from Interbell, which is my home state of Montana, I believe. Kirsten, it's good to see you and or talk to you. Pre-application definition for this app or list of allowable, please. I believe that, and I will get more research into this, but as we look in the FOA and those documents, they didn't provide a comprehensive list because they didn't want it to be either constraining or allowing people to throw stuff in there that may not be related to the application itself. But as the FOA says, pre-application expenses are directly in the support of the design, the forecast, the preparation of the application itself. The further caveat that would be is that any cost must be under the .200 cost principles reasonable, allocable, and necessary. From a reasonable standpoint, I will just point out that any cost that will have to be determined as like a third party, there's a lot of criteria that goes through it. And it does say that, so for example, a person cannot include a cost that would normally be procured at one price at a significantly inflated price. So all costs have to be reasonable, and the criteria at .200 will provide that information to you. Secondly, pre-application expenses have to be allocable. As I just mentioned before, in the FOA, they talk about support of the application. So anything that has to be generated or determined through the application process can be included as a cost. So if that's engineering time, engineering labor, engineering contract, financial people doing forecasts, things of that nature, administrative assistants, application writers, those kind of things could be included. But they have to be specifically allocable, which means they have to be identified through contemporaneous evidence, meaning a timesheet of an engineer, a timesheet of an accountant has to have pre-application preparation related to forecast or design or system requirements, things of that nature. And lastly, it has to be necessary. And the necessary topic, when we say pre-application expense, if you took away that cost, the application would not be complete and would not have been completed. So those are the just kind of the overviews of those two questions. And I will try to follow them up with a little more detail if I can provide that. I don't believe we have a full comprehensive list.
Yeah.
So
thank you, Chris.
I just got yeah, and I think I just answered question number 7 as well.
Yep.
And again, I will get back to them in more detail on that.
And I would say, Chris, the one other thing we want to add to that is pre-application expenses cannot exceed 5% of the total project cost.
Right. So regardless, you're right. So regardless of whether they meet the criteria of being a pre-application expense in support of that, and they're reasonable, allocable, and necessary, if they exceed 5%, they will be limited. So.
Chris, we do have another question here. Should potential grant proceeds from ReConnect program be included in the statement of cash flows?
Yeah.
I may have jumped down a little bit far for you on that list.
Okay, let me see here. Ultimately, it is a part of the cash flow process in, someone said yes, so we'll just go with yes. So, I was going to say, normally that would be put in there, so I would also say yes, but it's not, because it is an actual cash flow. It's a source of cash. It's part of the financing process. It's how you're going to build the assets that you're going to invest in. So it's, it's not part of operating cash, but it's part of the financing and investing. So. Is that my last question?
We have had a number of questions that have come in about whether or not the webinar will be posted. We will be posting the materials from this webinar on the website in a couple of days. Additionally, this webinar will be repeated again in the month of February. So if you are subscribed to the ReConnect website, you'll get announcements about when that webinar is scheduled.
Okay.
Give us a second. We're getting a couple of questions in. We're just kind of flagging through them.
Sure.
Here, Chris, here is one. Is the required pro forma submission specific to the project to which the application pertains, or is it for the applicant entity generally, so including the service areas that maybe aren't part of the application?
I am not sure on the pro forma question. So I'm not part of the application process, so I would have to defer to somebody else on that. So we can get back to them.
Yeah, we'll flag that question and we'll get back to you on that. We have one more question around the pre-application expenses, whether that includes costs up to the submission date of March 16th. The answer there is yes.
Yep, I was going to say. Yeah. So once they submit, once they submit the up until the time they submit the application on that deadline, but they should be aware if they submit it early, it would not include those costs because we are only advancing on the first FRS for pre-application expenses. So it's only up until the time they submit the application or this date, so whichever is sooner. And it should be noted that they should then make sure on the day they submit those application expenses, or once they submit the application, they need to get those application costs tied down.
We have a question about the 100% grant product. Is the match 25% of the total project cost?
I don't recall off the top of my head. I can't remember. Do you happen to know? I thought it was 25% of the total project cost as well. I think when we do match, it's always as part of the total project. But under which program were they doing 100%? Was this 50-50 or 100% grant?
100% grant.
Yeah, so then it would be 25% of the total project cost. Do you have a different answer, Rebecca?
We have a question about the deadline. The deadline for all 3 products is March 16th at 6 p.m. Eastern Time. This March 16th, 2020 at 6 p.m. Okay, we're getting a couple more questions in, so just 1 second. While we're sorting through those, I do want to let everybody know that we'll be having a webinar on the environmental components of the application on Monday, the 27th at 1 p.m. Eastern Time. So that during that webinar, we'll be going over the components of the application, of the environmental components of the application that you'll have to complete. The registration for that is up on the ReConnect website. All right. I think that actually hits most of the questions. We'll give everybody another minute or 2 to submit them, submit any last minute questions. If not, Eastern Time for 6 p.m. It will be the Eastern Time zone, so 6 p.m. Eastern Time on March 16th. And I will confirm that it is 25% of the total project costs. Chris, you were right on that. I was just pulling that information up to make sure we did not misspeak. All right, if you had a question that wasn't answered during the webinar, I encourage you to use the Contact Us page on the website. That is the help desk. We are responding to those questions and can either answer your question there or connect you with somebody who might be able to give you more information. And we will follow up on any of those questions that we needed to get more information for you today. All right. And with that, thank you and have a good day.